Welcome back to the cryptowrld channel, everyone. My name is Josh, and this video will be an important one to watch before tomorrow, because tomorrow new CPI numbers will be released, which will update the official inflation rate in the US. This is a big deal for markets, so I'll be talking more about that in just a moment. Definitely stick around. First of all, taking a look at the early expectations for the CPI numbers that will be released tomorrow, because these expectations are basically what the market has currently priced in. And these expectations, by the way, according to consensus, are predicting the year-over-year inflation rate to drop from currently 8.3% year-over-year down to 8.1% year-over-year. And the trading economics forecast is predicting the year-over-year inflation rate to actually only drop down to 8.2% year-over-year. So basically, the market is currently expecting and pricing in for inflation to drop down towards around 8.1% to 8.2% from where it is right now at the time of recording this video, which is 8.3% year-over-year. And so what this actually means is that if inflation comes in at these expectations, so if we see a slight drop in the year-over-year inflation rate, then honestly, we might not see a lot of action. We could see a very small relief or a very small pullback, but it's unlikely we're going to see an extremely volatile move based on those numbers if we meet expectations. But if the year-over-year inflation rate comes in under 8%, so if we drop lower than what the market is currently expecting, then that could very likely trigger a pump across the market, across the stock market and also the crypto markets. But on the flip side, if the numbers come in higher than expected, so if we see a year-over-year inflation rate at around 8.3% or even worse, if it goes back up again to above 8.3%, then that would be very bad for markets. If that happens, if we see inflation year over year go higher again, so above 8.3% once again, then that would very likely trigger another dump across the markets. Because basically, if inflation comes in worse than expected, and instead of slightly declining as what we're expecting, if it actually rises back up again, then that would basically send a signal to the Fed telling them that inflation is still very much here. We are not in a downtrend on this inflation yet, which means if CPI inflation ticks up again, that basically signals to the Fed that they need to do more work in order to bring down inflation. And that work is in the form of rising rates and quantitative tightening. And both rising rates and quantitative tightening are bearish for markets overall, because it essentially removes liquidity out of the market. And the reason why inflation coming in lower than expected would be bullish for markets is basically the opposite of that bearish reason, because if inflation comes in lower than 8%, for example, that signals to the Fed and signals to the markets that there is actually progress being made on inflation from 9.1%, which is the peak so far. And even though inflation still has to go down a lot further, we definitely have made progress from the 9.1% peak. And of course, the situation would look even better if inflation comes in under 8%, even though obviously we still have more room to go beyond that. And so if that's the case, if inflation comes in lower than expected, that basically means the Fed is making enough progress with pretty much what they're already doing, which would basically mean the market wouldn't have to go further and to price in more rate hikes than what's already been priced in. And in case you're wondering what the market is currently pricing in terms of future rate hikes, looking at these Fed meeting probabilities based on what the futures market is actually pricing in, these are the futures contracts. And as of right now, the majority in the market is already pricing in another 75 basis point hike at the November Fed meeting, which is the next Fed meeting from now. And then after that, the majority in the market is already pricing in another 50 basis point hike in the December Fed meeting. And then after that, the majority in the market is already pricing in another 25 basis point hike in the February Fed meeting next year. And so simply based on what the majority is pricing into the futures market right now, we should be expected to see the federal funds rate rise up towards around 4.75%, so just shy of 5% by the end of the February Fed meeting next year. And so basically what this means is that if the Federal Reserve keeps hiking rates up towards a high of 4.75% by the February Fed meeting next year, then we might not actually see a lot of bullish or bearish price action, because that's what the majority in the market is already expecting and already pricing in. But between now and then, if we see bearish factors such as inflation getting worse than what we expect, then that would basically mean that market participants would have to price in even more pain. So we will see these probabilities move to the upside. But considering the fact that basically everyone is expecting rates to go higher and everyone is expecting more pain ahead, and this is already being priced into the markets, if we end up seeing bullish factors between now and then, like inflation dropping a lot faster than expected, then that would mean that the market has already priced in too much pain ahead, and basically we would need to see more of a bullish reversal as market participants have to reprice their portfolios. But to basically summarize this entire segment of the video so far, if CPI inflation comes in under expectations, if it comes in lower than around 8% year over year, then that would be bullish for markets. I would expect a pump if inflation comes in under 8%. But if tomorrow CPI inflation comes in above 8.3%, then that would be bearish for markets and would need to price in more pain ahead, which would basically mean we would likely see a crash across markets if inflation comes in higher than 8.3%. And really anything between around 8% and 8.3% is relatively neutral. We shouldn't see too much action if that happens. And if you want to stay up to date on all of this, make sure you're subscribed to this channel with the notifications turned on to not miss out on any of these important update videos in the future. And also, if you want to stay up to date in real time and know about these numbers as soon as they get released, then make sure you follow me over on my Twitter. The link to my Twitter is in the description down below and also in the pinned comments. But anyway, just giving you a quick update on the US stock market today. This right here is the Nasdaq 100 index on the daily time frame, and right now at the time of recording this video, the Nasdaq 100 index is currently trading towards its yearly lows. And so considering the fact that the Nasdaq 100 index just broke below the June low and the September low, currently we don't have a lot of support in this region right here, because obviously the price action is just below a significant range of support, which should now be acting as new resistance. And this range of resistance, by the way, is sitting in between around 11,000 up towards around 11.2k for the Nasdaq 100 index. But for any of the bulls out there, there could still be hope here for the Nasdaq 100 index in the short term if we see a local low, because right now the Nasdaq 100 index in terms of the price action is currently sitting in lower lows, while the daily RSI is currently forming higher lows. Although as of right now, this potential bullish divergence has not been confirmed because we haven't yet seen a green candle confirming a local low in both the price action and the RSI. And so it's very likely that this potential bullish divergence would strongly depend on the CPI numbers that we get tomorrow. But anyway, despite the stock market dumping into new yearly lows, we're actually seeing the price of Bitcoin hold above its yearly low, which is of course that June low. In fact, right now, while the stock market is dumping into new lows, we're actually seeing the price of Bitcoin up by around 8 to 9% from the June low. And so this goes to show how strong this range of support is for the price of Bitcoin. And obviously, if you've watched any of my videos over the last 1 to 2 months, then you would know about this range of support coming into play in between around 18,500 and 19,000. And at the same time as the price of Bitcoin running into this massive horizontal range of support, we're also seeing the daily Bitcoin RSI currently retesting this uptrend line of support. And at the same time as the daily RSI testing this important support, we're also currently seeing a bearish cross in the daily Bitcoin MACD at the time of recording this video, but this bearish cross hasn't yet been confirmed because we still need to see a daily candle close with the bearish cross in place. And so right now, based on the daily Bitcoin price oscillators, this really is a critical moment, and honestly, a lot of these signals will most likely strongly depend on tomorrow's CPI numbers. Because as I said earlier in the video, depending on what those numbers are, we could end up seeing a lot of volatility around the release of those new CPI numbers. And speaking of potentially seeing an extremely volatile move, if we zoom out further on the daily Bitcoin charts and take a look at both the Bollinger Band indicator and the Bollinger Band width indicator, we can see that right now is the tightest squeeze in the Bollinger Band that we've seen for well over a year. In fact, to see a squeeze in the Bollinger Band this tight, you would have to go all the way back towards around later 2020. And once again, as I've been explaining over the last few days, this squeeze in the Bollinger Band indicator means that we're very likely about to see an extremely volatile move in the price of Bitcoin. And normally when we look at the Bollinger Band indicator on the daily time frame for the price of Bitcoin, we typically see the Bollinger Bands squeeze around 1 to 2 weeks before before the volatile move actually plays out. And at the time of recording this video, we've already been in this squeeze in the daily Bitcoin Bollinger Bands for a little over a week, closer towards around 1.5 weeks now. And so what this suggests is, based on the Bollinger Bands and based on Bitcoin's history, it's very likely we're going to see an extremely volatile move potentially begin sometime this week. And obviously tomorrow's CPI numbers could be the catalyst for that volatile move, depending on what the numbers are. But anyway, just giving you a quick update on the 8-hour Bitcoin charts, because technically speaking, this break to the downside is still in play, with the first technical price targets still currently in play at the time of recording this video. And if you want to know what the price targets are for this pattern right here, then check out my last video, the video that I posted yesterday on this channel. But anyway, getting straight into the 4-hour Bitcoin chart, right now the price of Bitcoin is still finding a lot of support at roughly around 19,050 up towards 19.1k, which is obviously that horizontal support level that I also talked about yesterday on this channel. And what I also said yesterday was that the 4-hour Bitcoin RSI was entering into oversold territories, and due to that fact, we were due to see a bit of a short-term relief to help reset the 4-hour Bitcoin RSI to potentially give us some more room to the downside later on. And that's pretty much exactly what we've been seeing over the last one day. Obviously, a lot of choppy sideways price action in the immediate short term to help reset the RSI. And now that the 4-hour Bitcoin RSI is obviously a bit higher, it is out of those oversold territories. Technically speaking, this does mean that we have a little bit more room to the downside now. But what is interesting to see in the 4-hour Bitcoin MACD is that we've just seen a bullish cross in this short-term indicator. And what this actually means is that the bulls are fighting back in the immediate short term. We're starting to see a bit of buying pressure enter the markets at the moment. But it is important to understand that this doesn't necessarily mean that we've definitely hit the bottom for this bearish move, because, for example, we saw the same sort of indications back here on the chart around the middle of September. But even though we saw a return in some short-term bullish momentum, basically telling us that the buyers were beginning to step into the market in the immediate short term, that didn't necessarily mean that we hit the bottom for this overall bearish move. But simply based on these short-term price oscillators showing a little bit more bullish signs, because by the way, not only is the 4-hour Bitcoin MACD experiencing a bullish cross, we're also seeing a very small bullish divergence in the 4-hour Bitcoin RSI. And so simply based on these immediate short-term signals in the 4-hour Bitcoin price oscillators, one of the most likely scenarios in the immediate short term, talking about the next day or so, is most likely going to be a little bit more choppy sideways price action, most likely up until the CPI numbers get released tomorrow. Because obviously, as I said earlier in the video, depending on what those numbers are, we could end up seeing an extremely volatile move. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum to US dollar chart. And right now, the price of ETH is still holding onto this upwards trending line of support, which is currently sitting at around 1280 approximately. And obviously, as you can see drawn out right here, this is a technical bear flag pattern, but that price target to the downside only comes into play. It only activates if we see a confirmed break below this line of support that I just mentioned. And as of right now, we haven't yet seen a daily candle close below this support level. And so technically speaking, this lower price target, which is sitting closer towards $1,000 per ETH, is not currently in play. And while we're here on the daily time frame, looking at the daily Ethereum price oscillators, right now the RSI is still just holding on to this ascending line of support. And so once again, this means that at least as of right now, we have not yet confirmed the next leg to the downside. And if you're looking at the daily Ethereum MACD, at the moment, this is showing very low bullish momentum, although we haven't yet seen a bearish cross. So we haven't seen a return in the bearish momentum, but the bullish momentum is very weak. So once again, this points towards most likely some more neutral price action or choppy sideways price action, but that could change with tomorrow's CPI numbers. And if you zoom into the short term, taking a look at the 4-hour Ethereum to US dollar chart, it's pretty much the same story here as well. Obviously, the price of ETH at the time of recording this video is currently still experiencing support from this horizontal level of support at around 1280 once again. But if the price of ETH drops below that level of support, then I would expect the next short-term support level to sit at around 1220. And as for resistance in the short term, our immediate level of resistance that I'm watching at least is sitting at around 1330 to 1340. And anything above that level, then I'll be looking closer towards around 1380, which is this local high. And if you're looking at the 4-hour Ethereum price oscillators, right now they're actually showing a little bit more bullish momentum compared to Bitcoin, for example. But this is just talking about the immediate short term, as in perhaps over the next few hours, maybe over the next day or so. But to be honest, something that's a little bit concerning at the moment on the 4-hour time frame is the fact that the 4-hour Ethereum RSI has basically already reset up towards its neutral level, which now gives us a decent amount of room back to the downside if we end up seeing bad CPI numbers tomorrow. But believe it or not, but there's ways to make money in crypto no matter what direction the price is heading, whether we're looking bullish, bearish, or simply neutral like at the moment. There's still a lot of ways to make profit in crypto, and if you want to know how to do that, then check out these videos popping up right here on your screen. The video in the top left of your screen shows you how to make money if the price is going either up or down, and the video in the bottom left of your screen shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.